Hello, and welcome to the Cryptocurrency News channel. If you want to join me on my live streams, I stream every day. Check out the link in the description in my comments and also in the description. Streaming on my backup channel, Good Free Photos channel, and also check out Crypto Daily Updates, one great video for all the crypto updates for the day. That channel is also in the description and the comments. So let's get to today's topic. I know it'll be a controversial one for many Bitcoin lovers, but Ethereum has to flip in Bitcoin sometime for the crypto industry to actually stay healthy in the future. Now, it doesn't have to happen within the next year or two. It could be 4 or 5 years out. But eventually, I believe Ethereum has to flip in Bitcoin. I'm saying Ethereum. It could be Cardano or Tezos, but I think Ethereum, being the prominent mainnet network and token and dApp development environment, is the most likely. And I think Ethereum has to flip in Bitcoin for the industry to stay healthy. And because it's really because like all the cryptos are basically tied to in price to the leading crypto. And Bitcoin is a leading crypto, and that presents problems. That presents problems because it doesn't scale, and it really has no chance of scaling. Now, Ethereum right now doesn't scale, but it can scale in the future, whereas Bitcoin, I don't really see it scaling in the future. Yes, there's Lightning and Layer 2 solutions, but that still does not improve the overall performance of the underlying blockchain. That's still stuck. I mean, your block size is only 1 megabyte and your block time is 10 minutes. That's going to restrict how many transactions per second you can actually do because you can only jam so many transactions in a 1 megabyte block, and there's a large amount of time between blocks. And the thing is, you can change that, but it's much, much harder in Bitcoin because of the miners. The miners have full say in whether that actually changes or not. And a lot of them, I mean, it doesn't really matter that the miners are in China or most of them are in China. The problem is that they won't vote on something that decreases their income. And obviously, getting Bitcoin to go to proof of stake, which I believe is a necessary step, or proof of authority or whatever, would actually invalidate their mining equipment, resulting in large losses for miners. So guess what? They're not going to vote for that, which means the protocol's probably never going to change. And here's the other thing. Miners actually like a congested network. You know why? Because in a congested network, they can charge up the ass for fees on the network. So miners actually really like that network to be somewhat congested. So they don't really want to relieve the congestion on the network because the congestion on the network actually makes them a lot of money. It's their financial incentive to charge a lot of transaction fees, especially when mining rewards get lower and lower in the subsequent years, which is why I don't think Bitcoin is sustainable very, very long term. It's probably sustainable for another 4 or 5 years, sure, but I do not think it's sustainable over the long term. And that's why I think Ethereum has to flip Bitcoin and become the index coin, because after it gets the POW upgrade, which will probably be in 3 years, which is, by the way, is still way before the next halving, at least a year before the next halving, it will no longer depend on hungry, like power hungry miners to actually maintain the network. There will be staking rewards, which basically requires someone to put in the stake pool and someone to keep a couple of servers on at the time. And it requires people to either have 32 Ethereum or join a pool so they can actually stake with others the 32 Ethereum that's kind of like concentrated in the pool. So there obviously is an environmental benefit for moving to Ethereum long term. But more than that, once they move to proof of stake, they'll have sharding, and that can actually process, I'm thinking, thousands, if not tens of thousands transactions per minute, and it will be more decentralized unless everyone decides to stake on Amazon Cloud, which would actually be a problem, and that is a problem that Vitalik has actually pointed out. Not really sure if that'll happen. Hopefully they'll have other cloud services that they will actually stake on. Maybe the Ethereum Foundation, Consensus, and a couple of other parties will actually start pools on something besides Amazon Cloud, which is what I'm actually hoping. But the main point of it is that Ethereum can actually expand for business use cases where Bitcoin really can't. If you're processing at maximum like 7 or 14 transactions per second, you can't be used for much. And let's not forget, Bitcoin doesn't have smart contracts, so it's very, very hard to build much on top of Bitcoin. Those two things combined together really inhibit Bitcoin's growth. Yes, it can be an index coin, and yes, people are saying store of value, but let's be honest, anything can honestly be a store of value. This cup can, like blue cups, could be a store of value if they really wanted to. Remember, like gold, yes, it's a store of value, but gold's also used in gold dental teeth, gold jewelry, and there are certain electronics that you have to use gold for. Same thing with silver. So outside of this store of value thing, like gold is actually a tangible asset that people can actually hold. And B, gold and silver are both used in manufacturing in various places, and also like obviously in the dental market, in the jewelry market. So they have that desirability trait where Bitcoin, outside of being like a virtual store of value, you can't really use it as jewelry. You can't really manufacture with it. It doesn't have any other intrinsic value other than people's belief in Bitcoin, whereas precious metals actually have other intrinsic value. I mean, realistically, copper honestly would make a better store of value because people use copper in a lot of stuff, so it'll always have value in production. Same thing with like steel, iron, wood, and all that stuff. Bitcoin doesn't have that property because you can't actually make anything with Bitcoin. It's A, rare, and B, people believe in its value. But the thing is, if it's not very useful and other coins are more useful, there are other coins that can actually flip in it, and it inhibits the growth of the market because without real usability and real ability for people to actually develop much on the network, the market uses for Bitcoin are going to be very limited. No one's going to want to transact a coin that takes like a week to come back, that takes a week to actually transact because the network's congested. Ethereum's had that problem too, but Ethereum is actually moving in ways to solve that problem where Bitcoin really isn't. Yes, SegWit does help. That might double its transactions per minute. But when you're talking about world finance and world economics, we're talking hundreds, thousands of transactions per minute. Bitcoin, there is no way it's going to be able to handle that. Whereas Ethereum proof of stake will actually be able to handle that. So Ethereum is superior to Bitcoin in both use case, usability, and future development, because Ethereum can actually change their protocol, whereas Bitcoin, the miners won't let them change their protocol. So I do think Ethereum also has greater avenues of growth and greater revenue growth and also greater investment growth for token holders because it does have smart contracts. It will be able to scale in a few years and people will be able to build a lot of applications on top of ETH, unlike they won't be able to on top of Bitcoin. So the growth and scalability part of it is definitely going in Ethereum's favor. Also, like Ethereum can also be used as a store of value. There's no reason that Ethereum can't be used as a store of value, whereas Bitcoin can. Some people are saying, well, it has infinite supply and it keeps on inflating. Well, yeah, so does gold because people mine more of the crap out of the ground every year. And remember, Ethereum's staking rewards are going to be decreasing year after year. So while there's not a practical, like a theoretical maximum, there's going to be a practical maximum. There's never going to be like 99 billion Ethereum anytime soon. So it is going to be scarce. Maybe not as scarce as Bitcoin, but it's still going to be scarce. And it's actually going to be much more desired for usability because of Ethereum network. So I do think it has greater possibility for growth, much greater use case, and it's a far better platform to develop on. You can develop some serious applications for multiple industries with Ethereum. And I think that's why you're seeing a lot of the whales actually investing just as much in Ethereum as in Bitcoin right now. Although much of the private industry is still stuck on Bitcoin, you're seeing the whale investors start to really invest in Ethereum as well. And because of those reasons, I do think that's why Ethereum actually has to flip in Bitcoin sometime for the crypto market to really grow and take off. And I do believe it will happen in about 4 or 5 years, if not sooner than that. So that is the episode for today. Let me know if you agree with me. If you're a big Bitcoin maxi pad, I challenge you to Mortal Kombat. Well, not really, but still. And have a nice day.